If we just continue with those principles of radical, bold change, business model transformation in the core operations, plus very clever financial investment, there is no better company at the moment than, I think, than Ping An. So we're absolutely delighted to have Jonathan Larsen, who's the Chief Innovation Officer of Ping An, who's come all the way from Hong Kong today to be with us. So could you give him an even extra special welcome, please?
Thank you very much, and good afternoon. It's a pleasure to be here in Berlin, and it so happens that we announced a small transaction yesterday here, so fortuitously I'm here for both. We made a small investment in a platform company called FinLeap, which is a fintech company builder and has been responsible for some of the leading fintech platforms in here and in continental Europe. But today I'm here to talk to you about Ping An, and I think we have about 20 minutes to just step through some slides before we have a conversation later on. But let me introduce myself. As Simon just announced, I'm the Chief Innovation Officer of the company. I also run a fund called the Ping An Global Voyager Fund, which is our corporate venture capital arm. But I joined the company about a year and a half ago after a career of about 18 years with Citigroup, and the last 4.5 of those I was running the global retail bank for Citi. So a very different company indeed, and I think what makes Ping An interesting is the sheer scale of what Ping An is. It's a 30-year-old company. It was created from nothing by the current chairman and founder, Peter Ma. And it's a company that today has, as you can see, approximately $1 trillion of assets on its balance sheet. It's a company that this year is on track to earn about $16-17 billion in net income. The company has grown, I'll show you some growth numbers later, but has grown about 29% compound for the last 30 years in net income. So that means the quick math is it triples pretty much every 5 years in contribution. But what's interesting is that the historical origin of the company is in insurance, and insurance is still a tremendously important part of our business, especially life insurance, but also P&C insurance. Over the years, the company diversified into a range of financial businesses, securities, asset management, banking. We own a bank in China. It's a medium-sized bank in China. It's a $500 billion bank. It's called a medium-sized bank in China. But more recently, the company has diversified into a range of technology-driven businesses, and that is on the back of a fundamental technology transformation that the company itself undertook. And so you can see that there's a range of businesses, we call them ecosystems, and I'll step you through exactly what those ecosystems are all about, how they link to the rest of the company, and the kind of value that's created. But just some examples. Lufax today is the largest digital wealth management platform in the world, and we created that from nothing 6 years ago. It's entirely in-house built, and it has about 37 million users today. It has about $80 billion of assets under management. And at its last funding round about 2 years ago, it was valued at about $18.5 billion. And we're doing a funding round right now. The number will be a lot more than that, I can tell you. Ping An Good Doctor is a company we just listed in May this year. Again, it is a completely new generation health platform. It basically provides primary care via a mobile phone platform. It's the largest of its kind in the world. It has about, as of our last disclosure, about 230 million users. It's valued at about $7 billion in market cap today. As I said, it's listed in Hong Kong, and it is, at least in my opinion and our view, something that could form the backbone of the whole health system in China. But similar models could play a similar role in many other countries, including developed markets. So that's sort of a snapshot of the group. I mentioned the growth. What really is extraordinary is the way in which the company is able to continue to drive growth in a very, very consistent way. And for financial institutions, that kind of growth in the world today is pretty much unheard of. Most developed market institutions are taking the view that they essentially are operating in a mature market with essentially a fixed revenue line, and their job is basically to optimize costs. And at Ping An, it's a very different model, and it's about finding the next levers of growth and recognizing that what made us successful 3 years ago or 5 years ago may not even be a business in 5 years' time for us. The company has really gone through a number of important phases. So the first you could think of as building out the product set. And in China, certainly Peter Ma's view is that in a highly regulated and government-dominated market, it's extremely important to have license optionality. So one of the early priorities was to build out a set of platforms that covered pretty much the whole spectrum of financial services. And today we're two things. We're the only non-government controlled large financial institution in China. And secondly, we have the widest range of financial licenses. And so to do certain types of business that might be very straightforward in other parts of the world, asset management, for example, depending on the context, you need a lot of different legal vehicles and licenses to be able to replicate what an asset management company might do in Europe or in the US. So the first phase was to do that. The second was to really focus on client service and client engagement. So in the early 2000s, it was one of the earlier companies to completely consolidate its relationship management, its client databases, its customer service. So for example, for all of the companies, we have 32 businesses today at the first level in the company. All of the call centers integrated in one place, and similar functions likewise. Then the second phase, I think for Peter, he's today 63, so 10 years ago, he built this remarkable company. It was listed in Shanghai and Hong Kong. It's a pretty successful company, very well regarded in the financial industry because it was always run to global governance standards, very different from a typical large company coming out of the China context, just given the transition there. And he kind of had the view that, as he tells the story, that he was more or less kind of done, and he was thinking about, well, what should I do? And then he sees Ali and Tencent scaling in China and the digital ecosystems building around those companies and the businesses that they were addressing being fundamentally transformed. And he realized there was an entirely different set of opportunities and decided to really pivot the company into technology. So one of the first things they did was to go all cloud. So for those of you from financial institutions, you'll realize that that's a very significant thing because most financial institutions are a prisoner of their legacy technology, particularly legacy mainframe applications, many of which date back 30, 40 years in history and are massively complicated, massively expensive, and very difficult and slow to change. So that was one. But the second was to start investing in new technology areas, firstly to solve problems for our customers and for ourselves as a company. That got us into, for example, building our own facial recognition or building our own voice print recognition. So in China, we can access via an API the ID database. Turns out you can do this in many countries, just very few people bother to do it. And what we're able to do is basically use that as an authentication match. We have a 99.8% accuracy. We take that, a couple of other pieces of data, identity fraud is basically gone. And they did that in the approach was to hire a few people from Carnegie Mellon, a few PhDs in machine learning and image technology, image science, and within a year and a half we had a product that could be used, and that's sort of where we took it. The next stage was to say, okay, now we have these technologies and a lot of them. Where do we take that? And it turns out that obviously there are new business models that can be created out of them. Many of those business models could not be created within the context of the traditional businesses. So, for example, Lufax, Good Doctor, a business called One Connect that I'll talk about in a minute, which is an enterprise platform that we use to service the needs of other financial institutions using technologies that we've built ourselves. But many, many other platforms, and I'll step through a few of those. And as we look to the future, we really think of, what does it take to operate in a world where really data is our raw material and our value comes from our ability to create meaning out of that data and create value out of that data and to be able to monetize that. So you can think of this as sort of three phases down at the bottom there. One is sort of creating products and services that are at scale in a market like China, which means very big traditional platforms. The next is sort of transforming those with technology and really figuring out how to use technology in a powerful and creative way. I'll give an example would be in our life insurance business. We have 1.4 million life agents. We're definitely not ready to move away from an agency-driven model because it's massively profitable and massively productive. But everything that those agents do is digital. They get recruited on a mobile platform. They get trained largely through mobile modules that are delivered on either tablet or mobile. Their CRM, their leads management, everything is driven. They never touch a piece of paper in their life with us. And then their client workflow is entirely digital as well. So we've used technology in this very powerful way. We use an enormous amount of machine learning or recursive analytics to help make sure that those people are trained properly, make sure the products that they are offering are the right products for the clients that they're talking to, for example. And then the next phase of where we're going is from technology then to sort of what we call an ecosystem model. And I'll explain more what I mean by that, but I guess it's something close to what this conference is about, which is a platform economy. We have a range of ecosystems, and I'll explain why we've chosen the ones we have. So the broad sort of strategy of the company is clearly we have enormous strength in our financial businesses. We've got a wide range of those businesses. We recognize they are being changed fundamentally by technology all the time, and we're absolutely at the forefront of doing that, and we're not at all afraid to disrupt what we have ourselves. So insurance, banking, asset management are really the cause of that. And then on the other side, our first sort of large new ecosystem business is what we call Pan Healthcare. We are the leading health insurer in China. Interestingly, given what you just heard, one of our partners is a South African company called Discovery Life. It's one of the most sophisticated insurance companies in the world. And Ping An chose them to be their partner 7 years ago. They own 25% of our health insurance business. So from that, we've actually chosen to operate in a very wide range of health industry sectors. So that's just sort of the first. So we think of sort of finance plus ecosystem taking us into a whole range of adjacent sectors where there are completely new sets of opportunities and the opportunity to create scale businesses. So financial services is obviously one of those. Healthcare is one of them. Auto is one, which is probably going to be interesting in the context of what you've just heard from the previous two speakers. We own the largest auto sales platform in China. Real estate is extremely important to us, and smart cities is very important to us. As we start to take a lot of the things we've created, we're finding that they're equally applicable to government services as they are to the businesses that we have. And what we're finding is that the technologies across all of these activities are highly reusable. So what we build for authentication for a financial customer is quite similar for what we can use in pretty much any of these ecosystems or even government services. So we find massive scale. And in fact, what's really happening is the boundaries between a lot of business lines that have been traditionally defined by their distribution channels are really blurring as a result of sort of the infinite access that the digital economy is allowing us to achieve. Where distribution is no longer the defining characteristic of an industry or a business. Just moving along, I mean, the way we think about why did we choose these ecosystems, well, they just happen to be where the consumer economy is today. We can see ourselves moving into a range of potential businesses through our government work. We're already doing work in education. we can easily see ourselves moving into aspects of the entertainment business and providing a very different level of competition there to incumbent players, even incumbent digital players. So why are we able to do some of this stuff? Well, we have scale and resources. So we have 28 finance subsidiaries. We've got a large healthcare network. We have Autohome, as I mentioned, which is the largest auto website. Autohome sells about 30% of the cars in China today as the largest car market in the world. We have data on about almost 900 million people through our ecosystems. We have 500 million direct users within our platforms. And we have clearly a lot of resources. We're generating around about a 20% ROE. We've got the growth that I described and just a very large amount of capital. So we're not in any way capital constrained. The question is, do we have the use cases and the opportunities to deploy that capital in a meaningful way? And that takes us to the last piece, which is talent. Our chairman has been ruthlessly focused on finding the best people consistently from day one in this company, and that applies especially in the technology domain. So building a brand that attracts the very best talent is really, really important when you're up against the kind of competitors we have in China, Ali, Tencent, and so forth. It really is a different world there. We have about 23,000 R&D engineers. We have about 1,000 people who I would call advanced data science people. We have 7 research centers, institutes, I should say, 25 now research labs. We have labs in Palo Alto and in Boston, and we'll open a few more in the US because we find that there are many people that would love to work with Ping An but don't want to move to Shanghai or Shenzhen. And so it's perfectly possible for us to leverage those resources and connect them via those remote centers, even though we don't really operate in the US market from a franchise perspective. So that we're really focused on a set of core technologies, AI, deep learning, a lot of vision. As an example, in our car insurance business, if you ding your car, what you do is you take photographs of it, you send them to us in our app. We have an engine that can basically identify every single part of every single car that's available, and we can price superficial damage, which is 70% of the claims. And when you have 15 million claims a year, which we do, that's a big deal. And then we can give you an offer in cash that says you have the choice of going through our process and going to our repair shop, or we can simply give you the cash in your e-wallet right now instantly. And about 30% of customers choose that, and it puts them in control. They're happy, and we've just truncated a very complicated process. As an example for some of what we do in image, we do an awful lot of big data. I'll give you some examples. We're very deep into other disciplines, particularly around blockchain. We have the largest blockchain settlement platform in the world in China, which we set up for about 300 second-tier banks. We have also just announced a partnership with the Hong Kong Monetary Authority to build a blockchain-based trade finance platform for them and a consortium of banks there. And of course, we have a large cloud platform that all of that technology sits on. When you have 500 million users, you have scale. So just moving through very quickly, because we only have a few more minutes, but healthcare, I mentioned Good Doctor, so it's a very large telemedicine platform. And this is an example of saying private insurance today is only 5% of the China market. What happens to the other 95%, and how can we play there? And China cannot possibly evolve the way the West evolved in medicine. The size of the population, the scale of the challenge, the limitations on trained resources just won't allow that to happen. So technology has to be the answer. So we have Good Doctor, we have an enterprise platform for private clinics. We're working with the state health system that pays 50% of medical expenses to introduce anti-fraud and over servicing diagnostics into that platform. We can eliminate about 10% of a budget for a municipality in 1 year simply by applying those analytics. And we're now working to help municipalities in 200 municipalities covering about 700 million people to actuarially underwrite those liabilities. Moving on, in the medical space we see in the future, and that future is now, we see huge opportunities to be a platform provider. So there just aren't enough skilled radiologists in China. And the way they run radiology departments typically is on a non-specialized basis. So they'll rotate people across the different image modalities and the different diagnostic areas. So they just don't have the right expertise model and the right focus. What we're finding is that image technologies are now able to basically achieve pretty close to human level diagnostic certainty or precision. And we've found that essentially the same set of skills can be applied in all of the modalities and all of the areas. So we're starting to build these out ourselves, and through our fund, we're starting to acquire these capabilities and access to them. So the one on the right-hand side is something that we've acquired through a deal we're just about to finish with a company in Beijing that photographs the fundus of the eye, and from that they can identify 35 disease types simply with an algorithm. And the next step of that technology is to deliver it by a mobile phone, and that makes it into a universal population screening device, as an example. So for us, we have 180 million financial clients. All of them can be screened by that. All of our good doctor clients can be as well, etc. So this is a platform in the making, and the kind of scale that we have in terms of consumer connectivity and institutional connectivity allows us to create an entirely new business out of something like this. Very quickly, Autohome. So Autohome, it's probably familiar as a concept because every country has something like this. What we do is we bought this company from Telstra Australia about 3 years ago. We paid the company it's a NASDAQ-listed company. It was, I think the market cap was about $2 billion. The market cap is now $10 billion. And that's not why we bought it. We bought it because we want to be plugged into this ecosystem. And our first step has been to inject financing. So for example, we sell 5,000 credit cards a day on Autohome. That's more than Citibank sells across the entirety of Asia. I know that because I used to run that business for them. And but we, injecting financing, injecting insurance, and then there's a whole data stream that comes out of this business. So most consumers will spend weeks investigating all kinds of different options. When they're doing that, they're telling us enormous amounts about themselves. And the difference between a classified business, depending how sophisticated, and what we're trying to do, I think, is we're trying to take that data stream and turn that into a whole business all by itself, as an example. Some other ideas that, just examples of what we've done. Telematics. We use telematics, your mobile phone. It turns out the gyroscope, the accelerometer in your mobile phone is incredibly sensitive. So we have the largest telematics program in the world for our auto insurance. And we can tell how fast you're driving, whether you're on the right side of the road, whether you brake too quickly, etc. We create driver scores. That's transforming insurance. I know I'm out of time, so just a couple of quick other ones of platforms. We're the largest non-bank lender in China through our non-bank side. We found that we could automate the entire business. We found that we didn't need pieces of paper from customers. And we had, by using analytics in an intelligent way, we could bring together a view of a customer and their risk in a unique way. We then found that that was scalable. So we now have 300 other banks that use our credit platform. And we are the largest, basically, integrated credit platform in China. So that's kind of a business that just scaled completely independently of the customer franchise. And I mentioned OneConnect. So this is our enterprise platform for dealing with allowing other institutions to take pretty much any of our technologies, which is a very counterintuitive idea. Why would we give our technologies to our competitors? Well, the reality is we're constantly building the next layer of these technologies anyway. So what we were using 2 years ago If someone else wants that, it is very unlikely to create a competitive disadvantage to us. Lastly, very quickly, I mentioned the fund, so that's another platform. And what that allows us to do is basically make investments in companies that have complementary capabilities, allows us to access those capabilities, to bring them to China or to elsewhere in the world where we're trying to use them, create alignment and create some layer of value through the partnership. And lastly, very quickly, what does it take to be an innovative company on this scale? I think it takes an innovation mindset at every level. It takes a bunch of processes to basically allow people to put dollars to work with minimal bureaucracy, to allow failure. And lastly, it takes resources dedicated, like the fund that I just described, like our central R&D capabilities. If you're in our place and you need voice, if you need image of any kind to do anything, the resources are there, you know where they are. So let me conclude there. I'm a little bit over time, but thank you very much indeed.
Great. Thank you to Jonathan. Thank you.